I think Bitcoin is going to plunge at the same time that gold's going to be making new highs. I mean, I think gold's broken out. It's taking off. It's about to hit new all-time record highs. It's already hit all-time record highs in, pounds, in euros, in all these other currencies. We're just a few bucks away from an all-time high in the dollar. But then there's no resistance to the price of gold, and it's just going to keep on heading higher, especially when people recognize that the days of low inflation are over.
In this video, Peter Schiff, chief economist and global strategist at Euro-Pacific Capital, discuss the effect of the banking crisis on investments as well as a possible impending doom for cryptocurrencies like Bitcoin and de-dollarization. Schiff argues that as investors become more concerned about the devaluation of the US dollar, they will look for alternative investments that hold their value, such as commodities. When the financial crisis finally causes the Fed to cut rates, U.S. stock and bond markets will likely sell off, having already rallied in anticipation of that capitulation. But the dollar will fall too, sending investors into gold, foreign value stocks, and emerging markets. Schiff said the response of Fed monetary policy to the 2008 financial crisis and the COVID-19 breakout resulted in unforeseeable fluctuations in the value of the dollar. Schiff has suggested that quantitative easing has currently ceased, at least for the time being. This situation has created uncertainty in the financial markets and calls for a reevaluation of investment strategies. According to Schiff, CPI rising a bit less than expected, but core CPI still spiked 4%, which annualizes to over 5%. The real reason gold is rising is that high hashtag inflation is here to stay. Soon, UO's CPI gains will hit new highs. Before proceeding further in this video, please make sure to click on the subscribe button below to stay updated with our latest content.
The inflation that we're currently dealing with, the Fed has been creating it for more than a decade. I really have to go back to quantitative easing one in 2008, 2009. That's where the Fed really started the money printing in earnest. And we're dealing with the delayed consequences of that now. I mean, inflation by definition is an expansion of the money supply. And so we dramatically expanded the money supply. The consequence of that is prices have to now adjust to a higher equilibrium, given all the money that's now available to buy stuff. And so we've just started that adjustment process. And I think prices have a long way to go on the upside just to catch up to the inflation that's already been created. But I think paradoxically, one of the reasons that I think the CPI numbers are going to spike to new highs soon is all of this optimism that inflation is cooling down has caused the dollar to drop. And I think the dollar will continue to fall. It's now down about 15% from its high last year. But I think it's on the precipice of another major decline. I wouldn't be surprised to see another 15 to 20% drop in the dollar between now and the end of the year. And I think that dollar weakness, which is a consequence of people starting to price out some of the rate hikes that they had priced in fact, starting to price in the next round of rate cuts. Also, the Fed has quietly returned to quantitative easing while pretending they're still doing so. All this is dollar negative. And what's going to happen as the dollar weakens, that's going to push up commodity prices across the board, oil in particular, but lots of other commodities are now going to be breaking out to new highs. And it was the pullback in those commodities that helped bring down the headline inflation numbers. But I think when they start soaring to new highs on the back of a weak dollar, that's going to help drive those CPI numbers to make new highs.
Gold is considered a reliable store of value and a safeguard against inflation, which has led to an increase in its value. Economist Peter Schiff has stated that gold's physical nature and long-standing value make it a more secure investment option compared to cryptocurrencies like Bitcoin. The primary reason for the surge in gold prices is the expectation that inflation will remain high in the near future. Schiff tweeted recently, "Gold is up $30 following cooler than expected inflation news. Traders are right to be buying gold, but wrong to think that inflation has peaked. In fact, the sharp decline in the dollar following a lower than expected PPI ensures larger future increases in producer prices." Peter Schiff has raised doubts about the future of Bitcoin. He has repeatedly warned that Bitcoin is a bubble that will inevitably burst and that investors who buy it are taking unnecessary risks. Schiff's criticisms have raised concerns about the long-term viability of Bitcoin as an investment. He believes that the recent surge in Bitcoin's value is primarily due to existing investors buying more rather than institutional adoption. In his tweet, Schiff mentioned Novogratz also admitted that when the Bitcoin price goes up, it's easier for holders to convince their friends to buy. Classic pump and dump manipulation.
The problem with Bitcoin is you've tokenized nothing, right? So at least with gold, you tokenize something. Bitcoin can't work. I mean, yes, as long as there are people foolish enough to buy it, the price could go up. But eventually the people who are buying it are going to want to sell it because they don't want their Bitcoin. They want to buy things. They want to buy a car or a house, take a vacation, buy food. And the farmer doesn't want Bitcoin. The guy that's selling a car doesn't want your Bitcoin. So in order to buy anything with Bitcoin, you got to sell the Bitcoin. Well, now you need somebody else to buy it. Well, if you run out of buyers, then the whole thing implodes, right? That just like any pyramid or chain letter, I call it a blockchain letter. It's the same principle as a chain letter. So it doesn't work. In contrast to gold, right? Gold is a real commodity. There's always a market for gold. At any price, jewelers will buy gold. If gold is $5,000 an ounce, they're going to buy it. The electronic industry needs gold. If it's $5,000 an ounce, they're going to be buying it, right? There's always going to be buyers for gold. And central banks around the world, if I'm right, they're always going to be accumulating gold. They need gold as a reserve, especially if they move away from the dollar. So you always are going to have demand for gold. There's been demand for it for 5,000 years. And it's because of its actual properties as a metal that it's so valuable. Bitcoin's only properties is that people think they're going to get rich if they buy it. And they can only get rich if they buy it if there's a greater fool willing to pay a higher price. Now, yes, This thing has gone on for a decade. It's gone on longer than the tulip bubble. So, it's setting a record in longevity, but, it's still going to end in disaster.
Peter Schiff has warned that the banking crisis is far from over and is merely the start of a more severe financial crisis. He attributes the root cause of these banking failures to the U.S. Federal Reserve's policy of maintaining low interest rates, coupled with the inherent moral hazards of government-insured banking. Schiff highlighted recently, the only way the government can make sure your bank doesn't fail is by destroying the value of the money that you have on deposit. It's inflation that is going to wipe out the value of everybody's bank accounts. In addition, Schiff has drawn attention to the fact that banks are not marking their assets to market and are instead pretending that their overvalued assets are worth more than their actual value, contributing to the insolvency of these financial institutions. This is the cusp of the crisis. It's going to get much, much worse if you are going to try to dismiss it.
The entire system is insolvent. I mean, thanks to government guarantees and government-insured deposits and the moral hazard that created, and the fact that for better than a decade, banks were encouraged by regulators to load up on treasuries and mortgage-backed securities, which they now own. And now that the Fed has finally raised rates, this portfolio is underwater. So banks are sitting on huge losses that they're not really marking to market because they're pretending they're going to hold these securities to maturity. But they really don't have the ability to do that because customers are going to want their money back because the money is losing value to inflation. And they want to take that money and do something else with it. I mean, some people might want to just buy treasuries and loan it to the government at 4 or 5% rather than leave it in the bank at close to 0%. So the banks are going to have to sell these securities, and they have huge losses, which they can't absorb. And so they're going to rely on the Fed as a crutch. They're going to try to deposit these underwater securities for par at the Federal Reserve and then use that money to repay depositors. But, the banking system is a disaster. And, your point about are bank deposits safe? No, they're not safe at all. They're in, grave danger. There are two possibilities for your bank account. Neither of them is good. One is that your bank fails and you lose your money, right? Or a portion of the money that you have on deposit. Alternatively, your bank doesn't fail because the government has bailed it out. And the only way that they could bail it out is if the Fed prints enough money to cover the cost, in which case you don't lose your money. It's still there in the bank, but it just loses a lot of its value, maybe most of its value. So yes, you can go withdraw it, but then take it to the grocery store. You're not going to be able to put much in your cart because prices are going to go up dramatically as a reflection of the loss of value of the dollar because the Fed has to print so money to bail out the banks.
As inflation diminishes the value of the U.S. dollar, people will seek to withdraw their money from banks as they won't be able to offer an interest rate that can offset the loss. Even if the Fed prints it, it just destroys even more of the value. On this note, we conclude our video. Do you agree with Peter Schiff's outlook towards Fed tightening, de-dollarization, Bitcoin, and gold performance? Share your thoughts in the comments section below. If you found this information helpful, please consider giving this video a thumbs up and subscribe to our channel. We look forward to bringing you more updates in the future.